What is going on, guys? Today we're going to talk about one of my top holdings in my personal portfolio, and that is Alibaba stock. We are going to go over some huge news that came out recently, and that is that Charlie Munger has sold over half of his position in Alibaba, which is insane to think about because the stock has only gone down, and this is not a guy who makes wrong decisions when it comes to the stock market. So today we're going to talk about that. We're going to talk about some of the things that could be going on behind the scenes that people don't necessarily consider all the time. And then finally we'll end off, with my opinion on the stock. Am I selling? Do I still hold? Kind of where am I at with the stock? So overall, I hope you enjoy the video. If you do, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. So every quarter, basically, investors and large investors and companies have to file their 13F. And the 13F basically lays out the stock positions that they've sold, bought during the last quarter. So really what we're looking at and what we could see from the graph here is, right, we're looking at the first quarter of this year, which is from, December 31st in here. So basically January 1st, right, to March 31st. So kind of in here. So we could see kind of what Baba did in that time period. And it's basically a whole lot of nothing, leading throughout kind of January and February, the stock really traded sideways. And then in the back half of February and early March, we saw that the stock just kind of tanked down in here. And again, this is on a lot of bad news, overall with the global economy, things happening between Russia and Ukraine. I mean, interest rate scares, all that kind of stuff, coming to a head and really affecting this stock in a very negative way. This stock was already beaten down significantly on the back of, China announcing crackdowns on big tech stocks within China and potential delistings overseas. But a lot of those things have kind of subsided. So really, we're kind of seeing just a lot of macro global economic issues that are really affecting this stock over kind of the last few months. So here we have an article, and it's titled Charlie Munger's Daily Journal Halves Alibaba Position. So Charlie Munger, if you didn't know, he basically runs the portfolio for the Daily Journal, and he kind of controls it. And we can kind of look at right now, they have about 5 stock positions is what we're seeing in here. And like I mentioned, we're looking at, we have their 13F filings, which ended in March, on March 31st. And obviously Charlie Munger is known for having a very good relationship with Warren Buffett and kind of following a similar trading style as a value investor, investing in companies that he sees a ton of upside in that are currently basically very undervalued. And he saw Alibaba as kind of one of those types of companies. So here, the guru slashes his company's holding in Alibaba by 50.17% during the quarter, selling 302,060 shares of Alibaba. The transaction had an impact of minus 13.87% on the equity of the portfolio. So that's just, the reduction in the size of the portfolio. And then the stock traded at an average price of 115.52 cents per share during the quarter. So now the portfolio holds 300,000 shares in total, accounting for 15.35% of the portfolio. So you can see here, right, it still makes up a double-digit position, but it was obviously twice that. So it was almost 30%, 30% of the portfolio. So last here they have, Guru estimates that this is basically, people who are providing some data. So Guru Focus estimates that the Daily Journal lost around 40% on the investment established in the first quarter. So I want to talk about this kind of real quick. So they lost 40% is kind of what they're estimating, right? And they're estimating that based off, what the average stock cost was during, that time period, and then what their average likely, cost basis was. So if we jump back over here, basically, they're looking at the average price in here. You see a couple big dips in here, this one, and then this one, and then obviously this one right in here. So it wouldn't be unreasonable to think that, the Daily Journal, depending on how they offloaded their shares, if they did it little by little or at one period in time, but if they offloaded at one period in time, they would probably have a large effect on the market. So you could see something significant like this where they start this kind of downtrend for the stock overall. So I wouldn't be surprised in there. But what's important to note is, right, them losing 40%, this is a short-term trade for them because they've only been building out their shares over really, less than the last year. They bought when everything kind of dipped down in here. And now with them kind of selling in the last 6 months, it gives them the opportunity to tax loss harvest. So this is something that, people see someone sell out of a stock, but they could have easily, bought back in or been buying back in. I think you have to wait 30 days. So even if they sold at this, worst case scenario, right down in here, they could have bought back in a month later, which, March, so April. So basically in the last few days, they could be ramping back up their position, and buying back in, and then basically have those losses, those on the book losses, to mitigate any profits that they've made, as the daily journal, or whatever it may be, or if their portfolio experiences a lot of profits over the next year, they can kind of offset those by taking these losses. So that's potentially what they're doing. I'm not saying for certain, that is what they are doing, but it could be a potential, and it'll be interesting to see if their 13F, reflects that they've been buying shares over the next quarter. Because if that's the case, then it would be a very strong indication that they are tax loss harvesting. So next thing in this article I wanted to touch on, and again, I don't really follow Guru Focus. I mean, they're probably similar, to some of the other sites like Seeking Alpha and whatnot, where they map things and look at overall trends. And a lot of the times they're collecting a lot of good data. And in here, they have this graph basically talking about how it's based off historical ratios, past financial performance, and then future earning projections. So, obviously past financial performance doesn't indicate future behavior. Future earning projections, are not always right or very accurate. But what you can see is they have a projection in here. And basically you could see, what their band range is and how Alibaba is trading well below the band. And it basically, based off their projection, what they're saying is that the stock should be worth around $400. Kind of right in here. This is where we're at in terms of the time frame. So they're saying that it should be around $400. Obviously, you can see past performance. It's actually stuck very close to this, and then had a few times where it's kind of spiked over and then spiked below, and then you kind of would have expected the stock to go down into here, maybe 250 range, and then actually come back up and then follow the line. That would kind of be assuming this projection was followed. But we've had bad news after bad news after bad news, and the stock has been beaten significantly down. So it's very interesting to kind of see this, and this kind of lines up with some of my projections based off PE ratios and whatnot, where the stock, in my opinion, based off the things I've seen, is reasonable to be around a $300 stock. And according to this, that's even below what their projections are. Another thing that's very interesting here that is a huge positive, and you see from a lot of big companies, especially like Apple. Apple's one of the biggest ones for this. But in March, the company upped its share repurchasing program from $15 billion to $25 billion, as the board said it continues to have confidence in its future growth. So this is absolutely gigantic, because basically when you're repurchasing those shares, there's less shares outstanding. So naturally what's going to happen is there's going to be a higher earnings per share, basically overall. So your PE ratio is going to drop. You're going to see everything kind of fall through the floor, and that artificially should crank up the share price. Because as well, you're going to have additional buying, because the company is going to be actually repurchasing its shares, which again drives some buying into the company, and overall is going to send the stock up. So that's huge, and that's something that I'm sure Charlie Munger is aware of. And if I remember right from the last earnings call, they're actually repurchasing U.S. shares. So they aren't just repurchasing their Chinese shares. They're actually repurchasing their shares on the U.S. market as well, which is massive, obviously, for U.S. investors. And it shows a vote of confidence from the company that Alibaba stock is not going to get delisted, because they wouldn't want to be holders of those shares. If the company was going to be delisted, then it just kind of is counterintuitive. So overall, that's another positive thing, that the company has going for it. So last thing I wanted to point out here is they have earnings coming up in about a little less than a month. So right now they're projected for 5/12. So a little less than a month there, but that could change. They could roll it back and adjust it, as they do. But really, what we want to answer here and what we want to look at is why do we think Charlie Munger has made the decision that he's made? And in my opinion, the biggest reasoning for it is what we talked about in this video, is the fact that I think he can capitalize on tax loss harvesting. Personally, the stock has only dropped So it's only become a better and better value. And if you think back to, Warren Buffett talking about all, the way he looks at companies and kind of almost comparing them to going to the grocery store and buying food at the grocery store, he talks about how if apples or whatever go down in price, you think you get a better and better deal as the price drops. So he kind of looks at stocks as the same way. And, by comparison, we know that Charlie Munger has a similar viewpoint in how stocks, how he purchases stocks and why he purchases stocks. So it doesn't make much sense why he would sell out of the position. There's obviously, a few other factors, and I'll link a video down below by a guy by the name of New Money. He made a really good Charlie Munger video going more in depth on kind of a few other factors that there could be. But in my personal opinion, it's all about tax loss harvesting. I think he knows that there's, a larger economic kind of turn going on right now. And I think he knew that he could probably capitalize on selling his shares and then buying them back for around the same price, if not even potentially lower, and basically, be able to tax loss harvest and then still be in the position. So that's my opinion on it. I think that's where he's at. Personally, what I'm doing is nothing. I am doing absolutely nothing. I'm not selling. I haven't really bought in a whole lot lately. I've kind of built out the position to where I'm comfortable. I don't remember exactly where my cost basis is. I think it's around 130, but I'm not uncomfortable there. Even around like with the stock being around $100, I'm not really uncomfortable with that. I mean, I might average down a little bit more, but at the same instance, I'm happy with where my position is built out to be, and I think the 130 is still a very reasonable price. So I don't really, see me buying a whole lot more into it. I'd rather diversify and build out, some of my other positions, and just, keep those positions kind of built out just in case, anything happens with Alibaba, in the negative direction. So that's kind of where I stand with things. I hope you guys enjoyed the video. If you have any questions, leave them down below. If you like the video, make sure you drop a like on the video. And if you want to see more videos like this one, make sure you hit that sub button. Thanks, guys. And as always, have a wonderful rest of your day.